Hello, everybody. Rob Chassner here. Regarding my book, Debt for Profit, chapter number 13 discusses making profit by hypothecating. And so the first thing that would need to be covered or discussed would be, what does hypothecation mean? Hypothecation would be taking something like a cash flow that you have and reassigning it to a third party without giving up title or ownership. So, for example, if you were financing somebody on a mobile home or a car or a piece of business equipment on one of the debt-for-profit transactions, where you bought something at a deep discount and you sold it at full retail and you financed it at an interest rate, you have a promissory note secured by a title, and you're going to get an income over a period of time. And what you would do then is take that income that you're receiving and then go to the bank and ask the bank, based upon your credentials, your good credit, what interest rate would they loan you money at? And then they would tell you, and then you could figure out how much money they would loan you at that interest rate that would be able to pay back the same number of payments and amount of payments from the transaction. So that sounds a little bit confusing as I discuss it. So let me give you a specific example. So let's suppose one of the examples I gave in a different video that I've done numerous times would be to buy a mobile home for, let's say, $3,000, and I sell it for $6,000. And I get $500 down, and let's see what that would look like. Let's see, 6,000. So you would finance 5,500. I would charge 12% interest, and let's just say I'm going to do that for 60 months. The payment would be $122.34. So that's 5 years, 122.34. So you would be collecting 60 payments, or $7,340.67. All right, so there we have a specific example. So if I paid $3,000 for that and got $500 down, that leaves $2,500 left in the transaction, and so my yield on the $2,500 left in that transaction would be 54.67%. So that's a wonderful yield, and that would be something that you would typically want to keep if you wanted to develop wealth. But some people need to buy groceries, and some people need to pay their light bill. And not everybody is a seasoned investor, so some people are just starting out that are watching this. So the question is, if you have good credit, you go to the bank and you say, I've got an income of $122.34 a month that I could pledge as a repayment on a loan over 60 months with my credentials, with my credit. How much would you loan me, and what interest rate? So let's say they used 6.5%. Now that's an arbitrary number. I'm just selecting to make an example. You'd have to figure this out yourself by going to the bank based upon your credentials. I will give a second example. If you don't have good credit, you can't go to the bank and borrow, how you can hypothecate with private money rather than bank money. But in this case, the bank says 6.5%. So what you do is that they'll calculate this for you. They'll loan you 6.5% money. So they'll put it in their financial calculator, and it comes up with, they'll loan you $6,252.86 if you're agreeing to pay 60 payments back of $122.34. So the hypothecation process would be, You're collecting this $122.34 a month for 60 months from the person who buys the mobile home, and you're redirecting it over to the bank to repay this loan that you secured on your own credentials. And why would you do that? Why do people hypothecate? Well, because you would be receiving a check, proceeds of that loan from the bank of $6,252.86. Well, if you left $2,500 into the transaction, you'd get that $2,500 back out of the $6,252, and you'd have a profit immediately of $3,752.86, and that's money that you can use to go buy groceries or to pay your light bill or to take a vacation to Europe or whatever it is you want to do. It's your money and it's proceeds. And then, so that's the whole principle of hypothecating. If you have good credit and you want to go to the bank and they'll loan you money, and you've done one of these debt-for-profit transactions where you've got a really good yield, 50, 60, 70% yields are very common in my debt-for-profit transactions, you could hypothecate those good yield notes to the bank if you have good credit, and get your cash out right now. And then you have to, for the next 60 months, you have to manage that monthly payment. Now, you could just have an assignment of that payment by notifying the buyer, but my comfort level would say I'd want to collect it from the buyer and then send my own check into, or endorse that check over to the bank so that I can manage and make sure that the payments are made because I'm putting my credit on the line. So that's an example where you can make over $3,000 profit immediately after you do a debt-for-profit transaction and collect your money back so that you can reinvest and do another debt-for-profit transaction, and then have profit immediately that you can use for whatever you wish, including buying groceries. So the second example would be, what if you don't have good credit? You can still hypothecate and look for private money. And I'm not going to go into much detail on this right now, but I'll give you the example anyway, the mathematical example. I'll discuss this in a different training tape, but there are some $7 trillion, that's with a T, $7 trillion of monies sitting in qualified plans. That would be IRAs, HEO plans, self-employment pensions, pension plans, profit-sharing plans, 401ks. There's $7 trillion of cash money sitting around. Many of these trust documents that are holding these funds will permit the acquisition of a note. That's one source. However, now that I'm thinking about it, you probably wouldn't hypothecate. You probably would just sell the note to that trust, whoever's the IRA holder. But there's private money. Private money. If you went to a private individual and said, how much of your bank account is earning under 15% interest? They're going to say all of my money's earning under 15%. And you can say, I'll tell you what, will you loan me money at 15% and I'll pay you back 60 payments. Let me put my calculator back on, of $122.34. And so private money, private individuals, you can hypothecate. It doesn't have to be a bank. So let's say you agree upon a 15% interest rate. They're going to loan you $5,142.70, and you'll pay them back this 60 payments of $122.34. All right, so they'll collect $7,340 back on a $5,142 investment. You get the $5,142, and you subtract out again the $2,500 that you left in the transaction. That gives you a $2,642 profit, even offering a hypothecation to a private party for a private loan. There are endless possibilities on this, but in any event, whether you have good credit or you don't have good credit, you can use hypothecation either through a bank or through private individuals, where you can pledge that note, those payments, without giving up the ownership or the lien rights on it. It's all based upon personal relationships that you have with that party, be it a bank or a private individual who is going to loan you the money. So that is what Chapter 13 of my book, Debt for Profit, talks about. Gives you other different examples. But hypothecation is something that is very motivating because, for example, let's say that you're just a new investor or just getting started and you can't afford to quit your job or you can't afford to be a full-time investor. It's very simple and easy to put together a debt-for-profit transaction. You could do so on a handshake. And then you can align somebody in advance, be it a bank or a private individual, to hypothecate the payments that you're going to get when you resell that product, the mobile home, the car, the business equipment, the medical equipment, whatever it is that you're going to trade using owner financing to the buyer. And you can pledge those payments to hypothecate to a private party or to a public party like a bank, and use those proceeds to fund the purchase of it, and do a simultaneous back-to-back closing, and using the investor funds that you're the party that you're hypothecating these funds to that will loan you money. So you could start out with zero money. You could start out with no credit. Or you can start out with money and credit. Either way, you can still benefit from these types of transactions and hypothecating to make immediate profit, where you can then go and become independent financially, where you don't have to work for a job, where you don't have to be in the rat race, where you can semi-retire. Bring that up to an immediate status of immediately retiring or immediately semi-retiring, and get out of that rat race where you're not going to, where you're currently maybe not enjoying your family and the time that you have with your family, and you currently don't have time to do ministry work. Now you can put a transaction together quickly and simply, provide benefits to those who are selling at deep discounts who need money, providing benefits to those who need to buy the product and need financing where they couldn't get it normally. You're providing a wonderful service and making a great profit, either over a long term, building wealth, or immediately, so that you can pay your expenses and enjoy the benefits of immediate retirement, or enjoy the benefits of immediately having time to spend with your family and your ministry work. So there you have it, Hypothecation, Chapter 13 in my book, Debt for Profit, a trademark and copywritten book. If you'd like a copy, feel free to request that via email. And if you would like to discuss the possibilities of consulting services to assist in putting together debt for profit transactions, you can also request a discussion about that via email. Thank you for your time and for listening. Good day.